The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Monday morning, week of Christmas. Had a big, strong week last week. I don't have to tell anybody that. Just wanted everybody to take a look at the euro here. We always talk about these particular setups, these high probability setups. Found this right on the scanner this morning as I was looking across the scanner and actually looking at some of the usual suspects. Pulled up really quick EUR USD, saw that we were at the bottom of our profiles on our daily, and we're coming up from the bottom, which is signified here by the weekly being in a downtrend here. And as I look at this, this is kind of what was presented to me on the daily situation. So I'm coming back up into the daily inflection point, and I want to point out some levels here. Reached a high of 122.73, rounded off. Those unfair lows are at 122.73. So hit it to the tick. This is our euro daily chart here. So close below, come back, retest, and on the weekly we had been sitting in this scenario as of last week. We came up and hit those weekly unfair lows for a long-term serious gift that came up into that 125.74 area. So again, we're getting some cooperation here. We've eclipsed near-term lows, and we're coming back up into a major inflection point via the daily unfair lows. And the cool thing is I know this thing's come a long way pretty quickly. The dollar looks like it's actually getting stronger again. So you got to take all that in consideration. I'm going to go right to the dollar. And by the way, we're never going to always be right. This is not a crystal ball. So orienting stops around that 122.73 area on the upside. I mean, you've caught about 20 pips so far on this type of trade, but oriented stops right above there might not be a bad course of action. These currencies are still going to be in play over the holidays here. I think some of the stocks are going to kind of be in the drift around phase, and the volume's definitely going to be down, but the currencies are definitely still going to be active, so I feel like this is a decent situation to possibly get into. Remember, the 240 unfair highs are still around 122.93, so past all that, you're going to probably have to say uncle on the short trade for a while on the euro. I'm not a big fan of going long this product, and as long as this particular instrument, which I'm pulling up right now, the U.S. dollar index futures is sitting right here, close above daily unfair highs, which are at 89.60, 61, 89.60, 61, somewhere in there. And as we've opened up today and come back down we've reached a low of 89.58. So, 2 ticks, and we've come up off of there. So, and we're kind of in, not actually wanting, seemingly to me, to come off of all-time highs after we've eclipsed near-term all-time highs. And you've got this fence, if you will, sitting here at 89.60. So, again, I'd love to see this thing consolidate a little bit, gather itself, get some momentum, kind of wind up here for another launch forward. And I think the euro and people trading the euro for the long side are getting concerned about that type of move again. Here's the short term on the dollar. Again, 89.72, 89.61. We've crossed some borders above. The targets right now are 89.80, 89.89, and even higher, in my opinion, on the dollar. But the good news is, again, going back to the daily, I think you can orient stops around those daily unfair highs right now. Okay. Don't see a lot of conflicting information to think otherwise on that particular product, which would also lend credence to the euro drifting lower possibly, again, with those stops in force always. Take a look at the ruble. We talked about this last week. I just want to kind of point out some things going on here. We talked about this weekly situation and probably those being at least near-term highs for a while, and that fundamental news, that blow-off, and then the pullback, and then trying to find out where this thing's going to probably get some legs here again. This is the get the legs here again type scenario, either around 50, let's just call it 58, or around this 55-30 area. So you're able to pick a battle on a relatively strong probability area around that. Again, the scanner's kind of picking this out for you, and we've got the ruble on the grid here. And as you can see, those are those inflection points, 55, 30, and 58 rounded off basically on that daily. There's that euro with the bottom there. There's the Aussie dollar, which I want to talk about in a second. And this USD JPY down here with 2 inflection points lining up. I want to talk about that a lot here in a second. But, the ruble's, kind of starting to migrate down below there. That was a decent long situation, in my opinion, staying with the long-term trend here on our weekly, as you can see that. But again, a new box attempting to appear possibly already at the end of the week. We won't see that happening until the end of the week if we do see that happening. But right now, long-term trend is still up, and you've got to look at this. If we get a close on a daily below now this 55.30, that's going to be technical damage. You're going to have to kind of sit on the sidelines, in my opinion, until we have some more confirmation type moves above, at least within this profile, or even higher. So again, this is kind of Custer's last stance. We're migrating a little bit farther south than I'd like to see it right now. And as we see this thing kind of imploding before our eyes here, we had some dual time frame lineups there. Now we're eclipsing. So this is kind of a stop out, sit on the sidelines trade at this point. While we're on currencies, let's continue to look at the Japanese yen here. And as you can see, the scanner picked this out for you. We're sitting right now at the 119.91, 92 area. We're trading 119.90, 192 right now, actually, sitting right up into those daily unfair highs. Considering that the dollar may gather itself a little bit, I don't think this is not a bad situation to finally take profits on the yen for a while, or take some points off the table. We've got 120.42, 43 sitting there on the weekly unfair highs. And that kind of DMZ up there is going to definitely be resistance, in my opinion. So I don't think it's a terrible concept to try to look at this as a profit-taking scenario after we cross these borders at 118. We talked about going long this product, and passing on the shorts below. But, now we've got some targets being hit. You got to take a look at the yen for what it's worth there. And as we have stated before, you got these coming up from fair auctions up into these highs on both levels, as I'm pointing across here, with this momentum move, as you can see on the short term. But we're hitting long-term and intermediate-term resistance. This is letting you know where that resistance is, and that's where we're at with that. Let's go to the Australian dollar really quick. Trying to cover a lot of currencies in the first segment here. Okay, so the Aussie, we've talked about just laying the shorts out there and putting the stops in and just kind of letting this thing breathe. We've got a dual time frame lining up here. We're at the bottom of both of these, but I want to point this out as we go into the Aussie. Again, that long-term trend, if you haven't been watching this show, we've been just talking about beating us to death with the short stick. And as we look at this, we always try to look at the dailies and the 240s to regulate that long term. We got a new box that's appeared today, and that's definitely being reflected in the scanner. And those unfair lows are at 81.30, 81.35 rounded off. So we could have a little bit of a bottoming formation here. You've got a new profile, new demand. We're up in that demand area in the fair auction. That's actually somewhat of a turnaround situation usually, but we don't have any divergent information or conflicting information causing us to think that we should trade against the long-term trend bounce. So this will be definitely a short-term kind of contra trade situation that's actually already, bounced a little bit off there this morning. But again, if you're going to trade that from the long side, you've got to know where to put your stops in below that 81.35 area. Shorts, might as well just sit tight here. And if we can get a close below 81.35, that's the newest reasons to short the Australian dollar. But again, I'm a big fan of not trading against the long-term trend on this particular product and just letting this thing unwind even farther. Remember, the Australian government's behind a move like this, like the Japanese, central banks behind the Japanese yen. I mean, these are stated concepts by these particular countries. Okay, just looking in the den there. Okay. All right, so as we kind of peruse across there, we looked at the dollar. We looked at a couple of major currencies. Haven't looked at the British pound in a while. I want to pull this up because the scanner actually was noting that there was something to pay attention to here. And I'm going to pull up the scanner again really quick. And I'm going to look at the GBP USD. And as you can see, bottom of the box here on the weekly, 156.05. So what does that mean? And I'm going to pull up 156.05. I'm going to hit the landscape chart and see that I'm right in the vicinity here, weekly and for lows. We've come down into those, and gives you all your inflection points in one grid here, so you can kind of like just note them if you need to. But as I look at the pound, this is the situation, and we don't have that daily. We're probably going to see this on the scanner pop up right now. Let me just see if we can see this. Okay, next refresh we get here, we probably will see. We're probably going to see our scanner pick that up in the next 60 seconds or so. We're sitting right at daily and weekly unfair lows. You know, what do you do with this thing? I'd like to see this thing break out and close below some of these, at least on a daily, on these unfair lows. I don't see this thing being a good long opportunity even yet, as we've come down from 172 and we're trading, what is that, 20, 15, about 8% lower on the British pound since the middle of July. I still think this is a relatively bearish trade, and it's giving you some reasons possibly if we close below these inflection points to continue to, stay on the short bandwagon. But for short players, here's the 240. You don't see a lot of reasons, even on a short-term basis, to start trying to go long this particular product. And I think this is kind of a wait and see at this stage to see if we break out of these ranges here and we've got a new inflection point to close below. And then I know we had that happen the other day, but again, we haven't had that close on a weekly yet. And that's the more important move down. So Rome wasn't built in a day, guys. I think the British pound's kind of a wait and see at this stage unless we start getting some dailies, closes again below that DMZ, and then you can start taking some shots again with, of course, stops in force. All right, when we come back on the show today, we're going to kind of allow me to do an exclusive show. No guests today, and we're going to pick some names out here. We're going to talk about some commodities we don't normally talk about that have been picked out by the scanner, and a couple of stocks that are on the radar screen because of that scanner. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. On our list today, things to look at. We might as well take a look at the S&Ps because that's the general topic of conversation seemingly across the globe and a lot of desks that I called during the day. Here's the situation. Weeklies, this is the March contract. We talked about this probably not holding to 2071.75. We're trading above there right now. Again, we came down that 1968 was the trigger point, and we've rallied over 100 points since then from those weekly inflows that we talked about. There's nothing up here on the dailies, and it seems to me that we're kind of winding, building already some compression to possibly move higher, even with no inflection points up there. But this is the situation on the 240s. We had that box up here below, which is bullish, and we still have this well below. That's a relatively bullish sign when you have boxes appear way below price action in general, and that's just kind of the way this is bouncing right now. And the reason being that we took that long-term stance is I got the S&P 500 up. We've got that breadth that stayed positive on our long-term. We had our breadth change negative. If you haven't been watching the show, change negative on our daily around that December 9th, December 10th area, which allowed that 2052 on the March contract to be a resistance area, and we had to pay attention to that. If you opted out on shorts at that stage, we still had that big support area, 1968. So that's the way the S&Ps have kind of unwound itself technically speaking, along with the breadth calculation involved. I want to take a look at the Shanghai and just reiterate, as we had looked at the breadth on the Shanghai, and here's our situation here. Got a little bit of a kind of a mishmash, if you will, on the short term, but that when we were pulling back 5% that one day, the breadth still was at like 74% or something of Shanghai stocks trading above weekly profiles, and that is kind of calculated in here. They presented to you in a real easy dial format. This is our admin terminal. So again, you probably don't even need those numbers. We're actually changing this to reflect those numbers in the dial. But as we looked at the Shanghai, we talked about not really wanting to, think that this was the end of the world or the end of the game on the Shanghai going up, and that's actually panned out to be very true, to buy dips on this. And as we look back, here's a 240 that we talked about a level to pick a battle. It was the only level we had around that 2804, and I think it hit it almost to the tick there, and we've come up and kind of used the unfair highs on our only thing we have to latch onto here to gather momentum to even move higher. So what do we do now? That's kind of what has happened. Again, I think the clear-cut sign here, get this back where I can read it. Okay, the clear-cut sign here is it's okay to be long, not okay to be short. And if you're looking at buying the Shanghai, you really probably want to see some new information to appear at this point. It's not, I don't feel comfortable just throwing a couple of bids out there at this stage. This has kind of come a long way pretty quickly. And we will have new information appear at some point. You will have new support areas, and the long-term trend may still be enforced from buying a support area until we're told differently and get some technical damage. As you know, if you watch this show, that's kind of the name of the game, is sometimes is wait and see and let the market come to you. Okay, so we've looked at the Shanghai. I want to look at the Nikkei really quick. And we're all aware of what the yen's doing. This is kind of on the scanner this morning. Similar situation to the yen, coming right up into daily inflection points. There they are, 17,857. Not saying that this is a shorting opportunity, by the way. It just may be a kind of a profit-taking thing. I don't feel comfortable shorting this because of the yen situation, the dollar situation. So you got to take that into consideration. Here's the short-term, 17,715. And those unfair highs at 17.8. I keep doing that. Hold on. 17,857. So you got a little bit of a DMZ you got to get through there, but I think we're probably going to move higher here, especially drifting towards the end of the year up. And the yen will probably drift up. The dollar will probably drift up based on what we've been talking about. And the euro hopefully will drift down and continue to be the gift that keeps on giving. All right. One other thing I want to cover on this particular segment is the 10-year, and I'm probably going to wait because it looks like we're going to break again, and you guys hang in there. Thanks for joining us during Christmas week, and this is a great week to ask questions, by the way. So anybody that's got any things up in the air they want to ask about, hit me. We'll be back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I always forget to mention the phone number. I always talk about calling in, 877-927-6648, or internationally, 727-445-1044. So guys that are watching on eSignal or watching the TFNN network, those are the numbers. And feel free to use them. Love to hear from you. Here's a 10-year March contract, and amazingly so. I mean, it's truly amazing with what the stock market is doing and how this rate environment is staying low. I don't have to tell you that. People have been scratching their head about that for a long time. But as we've seen this thing show its hand over time, you really can't argue against it. And, you know, it's I think the bond and the note market are just so terrified that Yellen's going to come out with just a downtick. I'm talking maybe a 1/10 of a percentage point unemployment rate. Just going to, come out with new dialogue, which they customarily have done. We've talked about this. They're more concerned with the stock market value, seemingly, than the sanity of balancing rates versus economic growth versus whatever. And, that's what the bond and note market are focused on pretty much entirely right now. And if you've tried to outthink this equation and go against, a freight train behind the MO of, the U.S. economic policy, you've gotten killed. And, the Jimmy Rogers and a lot of other people in the world, Bill Gross included, have been in the other camp for years, literally, and it's cost them and other folks a lot of money that they've been managing money for. So again, this is kind of, you want to see some technical damage and some confirmations, just like we had back here. I mean, this is the 10-year back in October. I mean, we kind of got, this is, I don't think we broke on weeklies. Let me just kind of check that just to make sure. Yeah, I mean, we're still in a weekly fair auction here, pretty wide. You got to have a little bit more appetite for risk to stay in that type of trade. But on the intermediates, I mean, getting below daily and for lows, closing below, migrating below, I mean, these are technical things that are kind of first kind of hand up technical damage that you got to pay attention to, and you can orient stops around those types of things. I hear you, Cub. So when we have new profiles appear, especially, and this is a really, really good example, especially when we're, and I'm going to blow this up a little bit, especially when we're kind of still in the fair auctions on our weeklies, and it's kind of the long-term trend is still intact in my opinion. You've got new leverage points that are provided by new profiles, and it's okay because we've got a new balanced area, so to speak, on an intermediate time frame, and then you can start trading support areas on the bottom of these meaty parts of the bell curves, and then also trading breakouts. And I know there was a breakout there. There wasn't a close above. This was kind of a fake out. That happens in trading. I don't have to tell you that. I've been doing that for a while. Got to close above and then kind of retest it and off to the races. And, then I'm also looking at these 240s here to regulate those types of trades. As we're in a profitable trade, kind of getting clear of fair auction is in a longer term time frame. I'm looking at these 240s to regulate my stops, if you will. Kind of using, well, I mean, these are trailing stops basically against a long-term position. I really fail to say that a lot of times, but that's basically what they are. And the cool thing is when you use trailing stops, alternatively speaking, when you use trailing stops, you've got a static non-volatility component, you've got a static stop scenario in a lot of times, and you don't have a volatility component built into that. Well, the cool thing is when you're using these profiles to regulate the trade up, not only will you get an indication on this scanner I'm showing right now, but you'll also be able to get that volatility component built into the algorithm that's automatically outputting these scenarios, kind of expanding and contracting based on a volatility component that's in there already. And recently below this 127.09, this was kind of, hey, first cracks in the armor on the long side. But, right now on the daily, we've kind of come back down on the recent, moves down. We've come back into this 126.06. We talked about picking a battle around 127. That didn't work out, trying to stay with the long-term trend up. Then we've got this 126.06 sitting here, and then we've kind of almost rallied back up into the top of the fair auction off of that. So, again, these aren't to the tick a lot of times. Sometimes they are. But you've got to give yourself a little bit of, especially if you're trading more than one contract, it's never a bad idea, in my opinion, to kind of put a toe in the water and above and below, or kind of use that scenario. So a little bit of trading 101 against trading inflection points right now. I want to mention gold really quick. A lot of folks trade this out there. This is a tough call right now. The dollar keeps going up, gold keeps hanging in there, but alternatively speaking, the other day when we had the Russian thing going on, you didn't see that, and all the unrest going on, you didn't see gold a flight to safety situation either. So again, it's a tough call on gold. I'm a little miffed at it myself right now. And when we broke above weekly and for highs the other day, that kind of broke my heart on a long-term basis, getting back down below 12.18 almost immediately. So again, stepping back and looking at it, we've closed above weeklies, and that's been a damage to shorts on a technical basis, and we've obviously done that on the dailies, but we're within a long-term fair auction on the weeklies. We're within a long-term fair auction sitting right below, kind of poking our head up every once in a while on the dailies. Intermediate trades, I still think you got to, trade long closes above this 1198, or maybe even before the close, take a shot, put your stops in below there possibly. And if we get back above 1218 again, just like we did 5 days ago, these are attempts at getting out of the long-term balanced areas. And, gold's a little noisy. I don't have to tell you that. That was not what I wanted to see, because I'm kind of more long gold than short gold right now in my mind. But again, those are the inflection points to pay attention to. And it's kind of nice, actually, from a classical technical analysis standpoint, to see that dollar climb and to see gold kind of gathering itself here again. And that in itself is a little bullish to me. So I'm looking at, again, the breakouts above 1218 are going to really confirm a lot. So I'm kind of sitting still a little bit. I'm getting chopped up around this 1200 area has been a little nerve-wracking to me. Okay, I want to get into a couple of, where are we at here? Okay. This is off the scanner also. Live cattle, I want to pull that up. Okay. Here's live cattle. Here's the current contract. Okay, we're getting back up into this 160.41 area, and we've been in a big downtrend, but you've got a major inflection point here. Let me see where we're at this morning. 160.10. So we've kind of come up and gotten into that inflection point and come off. Live cattle, again, this may be something to focus on here as far as an inflection point that you've got on an intermediate basis on live cattle with stops oriented around there. And the long-term trend down is going to have to be compromised completely. And you've got these weekly unfair lows that you pretty much started having some technical damage here around 164.50, 250, but you've also got around 164 daily unfair lows. So all types of shorts based on that breakage and long-term trend down by live cattle are going to have to be called it quits at, around above that 164 area. But you've got a decent leverage point here that you've had the technical damage on the weekly, the daily obviously first, and you've got a chance to pick a battle here around this 160.41 area. Something else on the not on the normal grid here, cocoa. Just want to pull that up really quick. Weekly scenarios. So again, you've had some daily closes above. You kind of compromised the long-term trend down a little bit here lately, but you're coming up into, and you had a close of, let me see if we had a close above last week. I'm pretty sure we did 29.90 and top of the box 29.75. Yeah, I mean, a smidget above. We're kind of hovering here. So again, we've had a close on the weekly above weekly unfair highs in cocoa. If it could kind of gather itself, sit here, maybe build some cars, as Tom would say, above this 29.75 area and stay above, I think we may have a change in trend in cocoa. And obviously we're kind of A-OK on the dailies at the same time, so that's something that the scanner picked out that might be somewhat of a long situation, but you can put stops oriented around this whole scenario that we just talked about below 29.47. All right, as we've talked about a couple of things here, I want to pull up some things off of the scanner. And remember, when we use the scanner to pick out some of these things, what I did is I put in bottom on dailies. So I wanted to see the S&P 500, what was hovering around the bottom of our daily boxes. And then also wanted to see, what has traditionally been something weak. And let me just look at the landscape here on Avon. We talked about this a little bit last week. Has it cooperated at all with the market moving up? That's the first thing. And general dynamics we want to take a look at too. But Avon products, we talked about it, and let's just kind of take a look at our charts. AVP, boom. And let's see where we're at. Okay, so Avon, $9 stock. It's tough to short a $9 stock, but guess what? Long-term trend's been down. We've been having some success off of trading breakouts here and rallies back into unfair highs. We've got a rally back from below 9 up into that situation here at 959. More powerful shorts going to be around 993, which also this states pretty clearly 992.80, 993, and that's the situation by looking at a product that's trading around unfair lows on the daily, maybe providing a trading opportunity. Let's take a look at Yum Brands, YUM. And this is another one. It's, not exactly cooperating with the marketplace. It kind of had a little bit of a key reversal situation that we've now gotten back down below around 71.29. Again, these are stocks that are, and here's our weekly, stocks that are not exactly cooperating super well with the market here. So you've got a fence at 71.29. Again, my thoughts are in general that the market's going to move higher, so you got to watch out for plays like this. But again, if the market does turn south, theoretically, this one should, come apart a little bit quicker than some of the other ones. I want to go in here now and look at daily. I want to take a look at what's trading below the box. That's going to pick out some things that are just generally weak. It's also going to include those bottoms. And what I want to do here is take a look at some of the ones that are just kind of ugly. PAYX. I'm going to pull that up. As that's coming up. Not a pretty scenario here for paychecks. Not a pretty scenario at all. And now, since we had, and I'm going to show you this, shows it like now sitting below weekly and for lows, PAYX. I know we had a big pullback, and there's the lows, 46.36 basically. Let me see where we're at pre-market. 46.38 maybe. You got a decent leverage point here now to kind of take advantage of a possible key reversal that's happening. Restate that. 46.36. Okay, on paychecks. Again, not showing extreme cooperation with what's going on in the marketplace and providing you some decent leverage points there to look at. Tractor Supply. All right, TSCO. And the reason I'm picking this out is because it's also showing, and there's, this is, by the way, these are the stocks that are showing below profiles in the S&P 500. It's about 15 to 20 stocks. Amazing in itself. Let me just pull this up. Actually, hold on. Excuse me. Clear the sorting. Or resort this. Below the box. Okay. As we see these, I'm going to pull up Tractor Supply TSCO. It's going to look at that because we've got a weekly box trying to appear, TSCO. Not bad, not bad. Provides a leverage point, 77.24, to take a look at from the short side. If the market does turn south at all, this one theoretically might have some problems going north here. We'll be right back, guys. Take a look at a couple other things we got on the grid for this morning, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. A while ago I was trying to reference the numbers here on the admin terminal just to kind of give you an idea of, we were looking at, what is this, 21 stocks actually on the daily below profiles only in our S&P 500. Amazing to say that. And I had the Shanghai up. That was confusing me a little bit. So I was looking at the Shanghai numbers while we were looking at the S&P 500 numbers. So again, that's the situation there. RJ, I'm going to answer your question in just a second. It's a good question. It's a great question. But as we look at these stocks that are not cooperating, showing extreme weakness, we've got FedEx Corp, FTX. Y'all know the news on that last week. That was picked out here. I just want to reference FTX really quick. Here's FTX. Here's the weekly situation right in the middle of a fair auction. I think long-term trend's still in force there, but guess what? We kind of got a gift. We got a new profile up here, and we've actually got unfair lows sitting at former unfair lows around the 175.07 number. This may be a really, and it's rallied quite a bit here. People catching back up with this. This might be a super duper cool short situation here. Depending on, if the market gives you any help whatsoever, this may be a really ripe opportunity, and the scanner kind of picked that out. Obviously, just a couple of other names here I want to point out from the short side. General Dynamics, Amazon, obviously, that's kind of the gift that keeps on giving, and I'm not feeling very rosy about that stock, as Juan Villegas was talking about last week. Xilinx took a look at this morning. Tractor Supply we looked at already. And I can come in here and these actually constantly update and rotate. So if you leave a scanner up, it's going to put new instruments in on the refresh. You don't have to kind of refresh the screen. It's just going to automatically update. As I'm sitting here, if I want to see what's sitting, above the box on multiple time frames here, there's quite a few. These are weekly, daily 240s sitting above profiles, and you can find some really strong stocks, and hopefully stocks that are coming up. Let's just look at AIV, and let's pull this up. That's kind of 3 inflection points lining up at the same time, or actually 2. Apartment investment and management. So here's the situation. You've got new profile up here. We're sitting above. We closed above on the weekly and daily. You've got a leverage point there around 37.50. Again, buying strong stocks in a strong market, this thing will really help you find them. The question is, new box yellow is getting ready to appear. Is there any way to tell where it will be in relationship to the current price looking at wheat 240? Let me pull that up. Well, actually, let me put up on the scanner. So I'm going to go in here. I'm going to kill this. I'm going to pull up futures, and that should give me our wheat, our current. Still got our thing in there. Let me clear that. And I'm going to look for wheat here. Okay, wheat. All right, so 240. And let me pull up the landscape here. It's a great question, actually. So obviously wheat's been on a tear, and that's been, the basis is really screwed up. I've been talking to the guys. Actually, I'd love to bring them on tomorrow from the grain elevator. I talk to them once a day, and they've got a lot of cool information on this. If you're trading wheat, RJ, we might be, get some fundamental news from the source on that too. But let's pull up our, unfortunately, and this is kind of a long answer. And what I'd like to do is kind of get into that answer tomorrow, because we're running out of time here. Let me pull up our grains. Where are we at? Grains. Where are they? Okay, wheat. All right, there we go. March wheat. RJ will have to pick this up tomorrow, man. I'm sorry. Guys, you've been great. We'll be back again tomorrow at the same time. Stay tuned for Steve Rhodes. And we'll have the guys from the elevator on tomorrow, and we'll talk about that wheat play a little bit more.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.